Alright, so we're gonna do some random days in June for Sydney to Tokyo. Say we'll do about 2 hours a day, get an idea of what we're looking for. Just doing some backtesting on NQ. Let's say date. Let's do June. Sundays. Oh. Let's start with May 31st. 18 p.m. We'll do about 2 to 3 hours per day. But we'll try to only do Sundays. Let's see what we see here. Okay. So we're looking at this expectation. What's our expectation? Huh. Okay, I'll have to fix that macro. Whatever. Anyway. Whatever. I'll work on that later. Let's say 18 market open. What's our expectation? What have we? We're already at 0.5. We are in jump. We're in between two areas. So what does that mean? Rejected off this bearish breakaway gap. Already in premium according to the PM session. So I'd expect maybe a gap down run here, pop up. So let's do that. Oh, okay. Alright, first thing that happens, we get a significant gap up. Okay, and a rejection. I want to see this maybe go up a little bit more. Another limitation of 1 minute candles, I can't see them print, but let's see what happens here. Okay. See, this would have been an interesting scalp, especially with the rejection there. I just needed to see where it started because there is reason. Super premium, significant rejection, like to see it go down. You can maybe squeeze scalp for 20 points and probably trail it pretty closely, which you shouldn't do anyway. Just leave your stop in let's leave your stop in structure. Might come back up anyway. Oh boy, look at that. Okay, now this, the thing is I need to see the candle print. If I were able to see the candles print, then I could say, is it rejecting here? Does it reach the main threshold? But now I have to wait. Okay. Alrighty. That's a decent move. Rejection. Taken back to the gap. Okay. Rejection of the 6. 618, gap rejection. With the limited information I have, I will try for a short. Oh, that's so sad. Put a stop loss. Here, top of Sydney first presented. See what happens. That is problematic. I'll put a take profit at the mean threshold. 1-to-1. Not a great trade, but with limited information, it's the best I can do. Why didn't it take me out? Really? It edged? Okay, fine. Honestly, see, this is the problem with candle structure. With the 1 minute candles, I can't, I would have trailed that. I would have taken that out. Come on. But whatever. I'll count it as a losing trade. Doing the right thing. Gotta keep myself honest. Oh, let's try that again. Okay. We'll see how much we're losing on that one. Already down 455. Let's see if we get anything out of this. All right. In reality, we know that could have been as much as, if I could have watched this properly, getting in from here, 422, could have been maybe 60. Oh, it's closer to 50, maybe 50 points. Minimum rejection of consequent encroachment of the first presented. 389. 20 points. Maybe even if you took this off the rejection, this would have been up 366, 390. This is still coming back down, I believe. This is going to get invalidated. But I need to see some candle structure, so let's see what we get here. Got your Sydney and your NYAM. Oh, okay, we're going right back up there. Back to the 786, which means that at the Fib 3, 786, we're probably coming back up here, which means we're probably coming back up here. Do I test it? You know what? I'll test it. I will test it. Keep it close. It's not a high probability trade, but oh shoot, stop. Actually, with that, I should probably look to get out. But there's a fair value up there. I'll put the stop here. And what I'll do is I'll put this here. So it's roughly a 1-to-1. A little bit less, but that's okay. Okay. Let's see what happens. Okay, you come back. Oh, you don't? Oh, balance price, that's dangerous. Okay, that makes sense. Okay, there you go. There you go. There you go. And you failed to make a higher high, but that's okay. You've got yourself a fair value gap. And you hit your TP. So, we can give ourselves a little W. Wait, oh. There you go. And we're up a little bit, which is fine. Okay. Could be an interest in rejecting here. I would like to see that, but let's study the price action first. Okay. I want to see it come down to this fair value gap. There's even a rejection opportunity here, but for less than 20 points, I'm not sure I want it. What are we studying here with price action? So this rejected, this failed to make it higher, likely going down. This failed to close lower, and it was a wick down rejection. So it rejected this immediate, minor fair value gap. Couldn't make it up here. It's definitely going down. Still failing. So this was a sweep of this liquidity. Still failing. It's coming back down. Oh, okay. It came back up. What does this tell me? This inside bar said it failed in both directions. Failed to make it there. Swept the liquidity. That's why I was able to make it up there. So a higher probability of that. But even still, it failed to make it up here, which means it's likely coming back down. Especially after sweeping the liquidity on this wick. Was this maybe low 25, maybe 25% of that wick? What do we have next? Down. There we go. Down candle. But it closed up here. Still closed down here. Next candle should be another down candle. Aim at this fair value gap. Okay, interesting. I have to keep in mind this wick. So I have to see how deep into the wick did I go. Well, a few things. Okay, so at this rate, we closed over this wick, which means that we now have this consequent encroachment in our sights of this bearish breakaway gap. Oh, that's interesting. There we go. Okay, so we had to wick outside of it. Boom. Alright, what's next? This is a very strong indicator that we may continue, but we are inside this breakaway gap. So what does that mean? Next candle. Continuation. My. And at that rate, if we're continuing to the upside, then I have to, first of all, it means I shouldn't have gotten out of this trade. I TP'd here, but if I had stayed in and trailed 410, I would have been up 50 points as opposed to 30. So how would I have trailed this? I would have trailed by putting my stop under the fair value gap created. But I wasn't sure that that was the case. So what did I need to do? What I needed to do was look at a higher time frame fib. So if you zoom out and you look left, you see that you can put a fib from the highest high that you have to the highest low. And you realize that if you do that, you have not yet reached the 786. So since you haven't yet reached that, even though you're in every premium, you failed to come below this area. And if you failed to come below this area, after you came down this area, you came up. And no matter what, you still came at most to the 618. And rejecting the 618 never got you below this area, which means you have to look for an opportunity to go high. I see. So you should be looking for, if you can't go low at this point, then that's why you have an opportunity to go high. I see. So my bias should have been up, not down. I wanted to see it down based on the Fib 3, but that wasn't enough information. This was a decent trade, but it was counter trend. Counter expectation. So 422, I could have still taken it, but wasn't enough. Alright, then what? This is still bullish. Rejected. I need to see more. I need to see more. Okay, so a rejection. Still close above, it's still bullish, but looks like it's trying to turn around. Have a fair value gap. You could inverse this, but you shouldn't invert this one as well. So, let's see what happens. Better, but you still can't make a higher high. And you have a macro. And you're coming down. So where does the macro go to? Macro open takes you where? Inside candle. Inside doji. Small candle. What's next? Okay, what is this telling me? This is telling me that it doesn't really have... It is pushing up, but it's failing to print up, which means it's going to have to come back down. And there we go. And there we go. So, respective to this wick, what is it telling me? It's rejecting that. It's rejecting that. It's trying to come back up. So it did. But still couldn't make it all the way up there. It's rejecting the 50% of that wick. Which means, if it can't go up in the next candle, it's probably going to have to come back down to the fair value gap to recharge. There you go. And there we go. So what I want to see at this point is I'm going to chance a buy. And I'm going to put a stop here because I don't want to see it go there. This is a 382 rejection on the intermediate. It could come back down here, but I don't want to see it happen. Still want to see it come up to maybe still a little bit, maybe around here. As a matter of fact, just because I think it's a quick one. I'll put it at the 786. That's a scalp. Ooh, that's not good. Okay, that's promising. Okay. There you go. Oh, it edged me. Oh, okay. I think I should exit that one. Wait, hold on. Okay. Now, this edged me, but that's my fault. I put it all the way up here. I should have put it at the 786. Literally, at the 786. That's where I should have had it. I don't know why I did that. I don't know how it didn't get filled anyway. Whatever. I'm gonna close that one then, because it doesn't make sense. It could keep going, but that should have taken me out anyway. And let's call that a win. How are we doing so far? Alright, not bad. Wait, what's this? Oh, we are in a bearish breakaway order block. Okay. Well, if we're in a bearish order block, we should also be at or past the mean threshold of this bearish order block. Where is that? That is right here on our 618. So this is getting ready for the massive dumpy dump. Now the question is, it's a 15-minute one too. Ooh. So this is gonna dumpy dump. Okay. So we just need to look for confirmation for that fall, which should be coming up soon, or an IFVG or an FVG tap. So let's look for that. Balance price range. Okay. This could be it. This is the macro. Maybe it achieved this goal here. 786 tap. This is an interesting risk to reward play. 14 points. I'm going to chance it. This is quite the dangerous move. This is quite the dangerous move. This could edge me. Yeah, this is dangerous. Okay. There we go. That's what you want to see. Okay. Oh, it's not good. That's not good at all. That's very bad. Okay. That's also bad. That's better. Okay, that's very good. That's not so good. This is very bad. Okay, that's good. Okay. Okay. It's chopping. This could make a higher high, which is very bad. I have another macro coming up. Oh, crikey. I should put a TP. I'll put a TP down here. Just because this is coming to Asia Open. And this could be very bad. This could be very bad. So, I should have taken profit there, honestly. Yeah, this is bad. That's bad. Yep, I knew that was going to happen. But, that would have made it a winning trade. So, trailing it appropriately would have been the right thing to do. But, doing the right thing. Okay. Now I want to see it trade below, because I do expect this to fall. Question is, where? Okay. Printing past the 50% of this wick, eyeball to about there. We'll probably continue up a little bit. This is still looking for liquidity. Oh, okay, maybe it's not. Okay, maybe it's rejecting the 50%, just eyeballing it. Yep. I want to see it trade underneath that level. Okay, it's still rejecting that 50% area. That looks like it's pretty bullish. Yeah. Okay, and this is your 8 o'clock open, heavy rejection. Not a bad idea to get in on this trade. Not a bad idea. have to trail it pretty closely though. Not necessarily, it could just keep running actually. Yeah. You still have room in this order block, deep into this order block to make the turnaround. Somewhere around here before you, I don't think you, excuse me, I don't think you invalidate it. Wow. Pushing it really to the limit there. Okay. The risk to reward looks interesting, but I'm going to look for confirmation considering I'm basically at 0 with the last trade. Yeah, that's not doing it, see? Wick through the edge of the order block with an interest in 2-bar reversal. Fair value gap rejection. Need to see one more candle. Absolutely not. This is going through the order block. Oh, it was very close. It could still, it can't make it up there. If it can't make it up here, there's a chance it comes down. Need to see another candle. Oh, that's it, right there. Let's see. I mean, yeah, there was a decent trade to be had in here. Immediate rebalance. I want to see what happens when you get out of this fair value gap. Okay. Oh boy, did not see that coming. That was strong. Okay, good thing I did not jump in that trade. I thought about it. Wow. I definitely thought about it. Let's go. No, it was clearly a weak rejection. The trend is up. I am impressed. I'm very impressed. Oh, sweep all-time highs. At this point, we're at all-time highs and previous day's high. So let's see what happens. Maybe we're so close, I guess it makes sense. Oh, this is still bullish. Yep, new all-time high. This would have been a decent entry right here. Let me say why. This would have been a decent entry because the retracement clearly looked like it was stopping. And you have a wick rejection of the 50% wick rejection. Plus you have the tap into the bullish order block. Yeah, that was a good trade. All-time high, rejection. Let's see what happens with this fair value gap. It looks like you might continue up. No, print there. You invalidate that, create an IFVG. So this could be the all-time high sweep. IFVG, tap, this would have been a decent entry. Maybe. Not sure about it though because of that wick rejection. Let's see what happens with the next candle. Rejection, but not a strong one, 50%. I need a next candle. This could continue to fall. Okay, 50%. Still not telling me enough information. Likely going down, but 50% on both sides rejected. 50% of this wick and this wick rejected. Now this goes lower but rejects up. This could go back up at this point. I need to see another candle. See? There you go. Now why did this go up? This was a consequent encroachment rejection and a rejection of the 50% of this wick. Candle structure told me this was likely going up, especially considering the fact that you were already printed outside of the fair value gap. So those three items told me good chance for going up. Now that you're here, you're at 50% of your intermediate term fib. There's a chance that this starts going back down. But I need to see what the next candle does, because this is also rejecting about 50% of this wick. And that's why you're coming back down. So this is rejecting the about 50% of this candle's area. So this could go back up a little bit. Okay. Yeah. That's how you scalp, I suppose. Now this is rejecting 50% of this candle's area, but it's still a very bullish candle. It could continue up. But instead, it's done. So that means the next candle should be red. And it is. Okay. A short is coming, but I don't know about yet. That's why. This is interesting. But I don't have, I'm not taking this based on price action because the candles are just too small. Alright, now we have a macro coming up at 850. I'll take this macro, see if there's another quick move, and then I'll move on to the next Sunday. Because we're actually, if I didn't take that last trade, we would have been up. But because I did, we're actually down. This is, what was that, 870, and actually we're up somehow. We're up by like $100 maybe. Say we're up 870, we're down. I wish it would do a total. Doesn't do a total? Fine, be that way. Minus, so actually we're down $50. 7. Let's I can do the math in my head, but let's instead give the viewers what they want. Transparency. 230 minus 325 minus 455 plus 640 equals, we made $90 on the session. Woo! And that's the importance of only taking good trades. Okay. Oh, you know what I should do? I'll do this better next time, but I'll put a tally. Maybe I should do a spreadsheet. That's what I should do next time. No. So it's 531. Yeah, the spreadsheet would be better. Alright. So let's see. What are we looking? So we're going into this macro. Okay, this is going up. Let's see what the next candle brings us. An up move. Now, what are we? We're still rejecting the 50%. Oh no, we printed past it, so I'd say we're generally going up. could make a new all-time high. And we do. And because we closed above that all-time high, there's a good chance we continue with the up. But we don't. We reject that area. And we reject the 50% of that candle, which means that we make a new all-time high and continue to the downside. So it's a good thing I didn't do that, because I thought about taking this trade to the fair value gap at least. But what stopped me was, because we rejected here, what stopped me was, it is a macro time. I know it's looking for liquidity. And we had also rejected the 50% of this candle. If we could have made it lower here than this candle, I would have been more interested. But just this candle and that candle alone, was it enough to say, now I'm more interested? But even still, I wanted this candle to come a little bit lower, because we also rejected the 50% of this wick. So there's a chance we even turn around a little bit. Okay. See, we close at the bottom of this wick, so we still didn't even make it. Not a very bearish signature. Well, it does continue though. I just didn't have the interest. Okay. Looking at the fibs, what do we see? I'm not seeing anything. I think we might still turn around. No. There we go. We make it. Oh boy. Oh boy. Now this is what you want to see. So this wick rejection was decent. If you could have gotten in on this candle, and then you could put a stop here, and you could take that to there, that would have been a decent trade. So if I do that properly, I would say this wick rejection gives you the interest, or the rocket fuel, if you will. It's like the fire. Okay, it's horrible fire, but you see the point. To move down, you have to put your stop right here, and your TP somewhere around here. Okay, that makes sense. Rejection. Let's see what the next candle does. Maybe come up a little bit. Oh. What's the next candle do? Come up a little bit. Fair value gap touch, rejection. Maybe come down a little bit. Okay. Rejection. Deeper into this fair value gap. Okay, it didn't do anything there. Down. So which side is a bigger rejection? This side or this side? Rejected the opening. Rejected the wick. So I think what I should do is put a fib on this candle here, and then try to ascertain how much in either direction we went. And what do we get? So this is going up, is what I should say. And it does. Haha. It goes up. Test this more, because it has an interest in going down. It needed more liquidity. And it rejected mightily. But is it done? It's still rejecting, let's say, the 50% of this. I don't think it's done. So it came down here. So this is just the chop back and forth, which means it still has to come back up. Okay, maybe I was wrong about that. There we go. And honestly, I think at this point, the move has basically happened. I think we do end up coming down to test this bullish order block, as well as the consequent encroachment of this bullish breakaway gap. But I don't see it happening too soon, and this would be going into 9:30, 10. You're chopping between these two at this point. Okay. Now, what led to this? What led to this? This move. What is the retracement of this? Wait a minute. How is this order block built? This is a 1 minute based on... I see. This is your... Okay, so that's right. That is correct. It is this and that. Alright, it doesn't necessarily need to come down there anymore. I could have seen this as a protected low. Sorry, this is a protected low at this point. When it came down here, it's rejecting the 50% of this wick. There was reason to take this trade to the upside, but I didn't. So let's continue. Okay, I want to see it test the mean threshold. The next candle, maybe. It just comes shy of it. It should come back down. There you go. There we go. Close past the mean threshold. And now we see what happens. This could be an interesting move to the upside. Let's see. If I see another green candle, I might jump in it. It might need to come back down a little bit more. Okay. Oh, I was gonna get in on that one. Oh, it happened too quickly. Fine. I could still get in, but I won't. I won't take it. Yeah. But it should go back up. Yep. Continue. No. But go back. Oh, okay. And where does this put us? 0.5. 0.5. Retest of the order block. Maybe come down here at this point. I don't know. After violating this order block so hard the last time, I don't know if you get away. What does this tell me? Oh, print outside. Taking the 50% of this candle. Might have to come back down again. Oh. Yep. So, yeah. That's interesting. Okay. Yeah. Well, that's interesting. That's a bullish continuation. Print pass. It's a very strong sign. But what's the next candle do? Up. No. Doesn't. Rejects. Can't make it any lower. So go up. What's it? Oh, this is a buy signal if I ever saw one. You know what? I'm gonna chance it. I am going to chance it. Put a stop right here under this candle. You don't want to see it go any further. I'll put a stop at all-time high. And let's see what happens. And it takes me out. And what does that mean? Now we're red on the day. This is why. How much is that? 90 bucks. Oh, that's all $5 on the day. Okay. It would help if I could see more information, but this is actually somehow harder. Okay, let's see, what is that? This could still go up. That's impressive. That's impressive. That is impressive. Edged here. That's why they say that you should put your stop outside of the Fibonacci, not inside it. But I try to be fancy, and that's okay. And that's okay. Let's move on to the next day. We're going to do the following Sunday. That's okay. June 7th. Wait, actually, you know what? Let me get rid of this Fibonacci first. Because it was done anyway. Wow. Just wow. All right. Okay. What do we have here? First, let's flip that fib. I don't know why that's broken, but we'll flip it. Okay. All right. Wow. So the market fell 1,000 plus points. Jeez. And you'd expect that it would go back up. So let's see what we have here. I'll put a fib. I remember this day too. I panic closed on this trade. During the daytime at least. Cheese and bread. The market could rise so much. How many? Whatever. We'll take a look. See. Jeez. This might be a little bit too much, but this might be a little bit too much, but we'll see. Okay. a day. I probably don't need that much, but it makes sense to me. So, all right. So this is complex because we're in super duper discount on all accords with strong, heavy, bearish PD arrays. So, what happens is the question. You expect to see some of that get disrespected and maybe some buy opportunities. So, what do we do? What do we do? Alright, what about in our... So maybe I want to see a drop and pop. We're in... Well, I want to see, yeah. I expect to see maybe a drop and pop. Let's see. Well, hard wick up. Who knows what to do with that? Not me. So, let's actually... do that. That's better. Let's see what the next candle brings us. Wick up. So it's going to look to fill that wick. It swept through this 15-minute untapped share value gap. So I want to see it come down, surprisingly. We have almost no gap on a Sunday, which is interesting. Well. Honestly, with a wick like that, once you show interest... I mean, once you start leaving this fair value gap, I don't see why not. You could take that and take it right to here. You could easily get well, not easily, but you could squeeze 100 points out of that maybe, and then just run away, because that should continue. But I don't want to get any part of that yet. I need a proper setup. Yeah, see that exactly. Sydney. First percentage fair value gap. Okay, interesting. Okay. Maybe you take this off the 50. Rejection. But no guarantee. And it could go for a loss. It wasn't quite to 618 yet. But it is a possibility. Okay. Chance it turns around. You have 50 plus the consequent. There you go. I want to see it come down to here, but still stay bullish. Okay, there you go. Okay, okay, there you go. Alright, now I want to see it come down here, tap this effigy, and maybe go off. Okay, okay, 0.5, need to see more, probably continue up, can't. So it comes back down, tap this FVG like we discussed. Consequent encroachment, tap, print out. I want to see more. See, that's why I want to see more, but you still reject the 50%. Problematic, because this didn't print outside like you wanted it to. Now it printed past the consequent encroachment. Don't want to see that, but it's permissible. Honestly, this would be a decent entry. Late, obviously, but it's a big stop. There you go. I'm gonna kill this trade here and take a W on that one instead of even trailing it. Because, so let's say we take that out and 0.275. Let's say that was 6, 7. Ah ha ha. 6, 7. Ah ha 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 ha. 275. I'm gonna take that one because I don't trust it now. It already came down here and rejected. And that did not look. It could still come down to here. Well, I mean, there's a fair value gap here. I didn't pay attention to that. It could be fine. Well, it's too late anyway. See? And that's exactly why. I didn't want to see that. This wick, I didn't like that it came down here and only made it to there. I needed to see it go further past this high based on this maneuver. That gave me no confidence. So that means it'll need to come back maybe even to Sydney, which I don't want to see happen, but it could happen in order for it to get up here. And then on top of that, this is a highly rejectionable area. But we also have a macro coming up. See? And it came right back here. You didn't touch the low, which would have been a problem, honestly, if you did. Because if you did touch this low, it would have edged me. So it just wasn't worth it. Honestly, there was a chance to get back in off of this rejection. There was. But obviously I can't do that. Yeah, that's rejecting, and that might even come back down. Let's see. What does the macro open bring us? An inside candle. No, it's not an inside candle. Okay. Okay. Small. Larger down. Might even come back down further. Oh, see, that's exactly what I was trying to avoid. This is exactly that's why I got out of this trade. Because I knew that indicated to me that it was going to come back down. And honestly, it protected this high at the time. There was a short opportunity here. So let me try that again. That this wick, that there was a fair value gap here, coming down here, did not resulted in a low, a high that was lower than this high, and that resulted in an interest in coming back down to seek more liquidity, and that's why I said it should come back to Sydney. Having said that, this is a really good entry because it's a 618 rejection on your long term, 0.5 rejection on your intermediate term, and making of a 2-bar reversal. So what I'm going to do is I'm going to test the long. It's a little dangerous. It's quite dangerous. But I'm also going to give it, also going to scalp it to there. It's not a good trade in terms of risk to reward, but that's okay. It's not good at all. That's going to kill me. Oh, okay. Okay. Ooh. Oh, okay. Oh, okay. Alrighty. I could have kept that going. Woo. Ooh. Protected the low. I love it. 50% wick rejection. Oh, that was beautiful. That was absolutely beautiful. How much did I get for that? $750. Okay. I'm up pretty decent today. I'm already up 1,000. Look at that. Okay. This is not bad. And I could have even let it go, but I mean, because of the macro, trailing it would be the right thing to do. Honestly, you put the trail under here because you have yourself a nice little balanced price range, decent little fair value gap created. It'll probably come back down, touch that, and maybe continue the upside. But you know, this was good. 2-bar reversal of makings of a 2-bar. Oh, see, there you go. Maybe looking at coming back down. I'm starting to get the hang of this, man. I like this a lot. Okay, continue the upside. See, I could have made even more off of this. Came right back to macro open, and then what you want to see is, since you printed past here, rejection of this balanced price range area. You want to see that continue the upside. It did make a higher high. I don't like that it's already turning around, but it could retrace to continue to the upside. Let's see. I don't like that at all. This reinverts this area. This is not good. This is not good. It's a good thing I'm out of this trade. But still could have squeezed more out of it, especially because you had this high as a target. I left a little bit on the table. Left about $400 on the table. A little less, but still. That's going back down. Okay, that now, well, yeah, rejection of that 50%. That looks like it's going to try to come back down. Okay, that's promising. Not very, but yep, test that area. Okay. Okay. Alrighty. Oh, that's not good. Okay, that's better. Alrighty. Okay. 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 What else? Could you make a higher high? Higher than this area. Still rejected this wick. Rejecting the 50% of this wick, that's not good. Which is why you come back down. But to where? This fair value gap. Test, and I want to see that go back up. But you don't. Instead, okay. Then you might have to come back down here. Okay. You didn't need to make it down here, but still rejecting that 50% area. Okay, there you go. That's it. So, in reality, there was a chance to stay in this trade, not just take it to here. But you needed to have the patience, and I was looking to take the scratch. Plus, like I said, if I had a better fill, a lot of things. I was holding the trade from down here. I could have taken it all the way up to here and then trailed. But, sorry, here. This would have been my TP. So, could have taken this trade from this candle up. Showed no interest in going back down. If you get in from maybe 48 or so, hold that. Oof. Wait, is that 840? Jeez. Man, that's a good trade. Yeah, it's gonna look to keep going up. Maybe a little bit down. Nope, up. You're just gonna keep going to the fair. Yep, there you go. Projections, boom, there you go. Oh wow, and it went past that. So the question is now, where does it turn around? Okay, well we got ourselves a little macro here. Whoa, hello. Okay. Alright, so this is your rejectionary area. Your macro target required. And you're not exiting the macro. Sorry, you're not exiting the order block. Okay, this is probably where you start to turn around because you're deep. Oh, you invalidate. Mean threshold. Probably, yep. There we go. And then maybe you have a turnaround opportunity. Nope. You have too many. Oh, interesting. You don't create a higher high. Also at the 0.5 of fib 3, which is at the 0.25 of your long term. This could be a high rejectionary area. It would be super duper long term. Honestly, you should be, I guess, not done for the day. Jeez. Is it still going? 0.5, yes. Plus the, wow. Wow. This is the kind of trade you just leave it alone. You could even invalidate this order block. Yep, and you do. Wow. And there's nothing stopping you from going up. 618 on your fib 3. Okay. And that's the date. Honestly, there's not much more to do here. It's already almost 9 o'clock. Honestly, I'm kind of tired. So this was a really good day if you traded properly. I walked away with 1,025 on the day, which is pretty good. Pretty good. And honestly, if this were live, it would have been easier rather than trying to read candle structures with printed candles. But, all right, let's do one more. One more. Starting to get the hang of this. Okay. Okay. What do we have here? We have an uptrend with a downtrend. Uptrend. So technically, from here to here, that's not going to tell us much of anything. You know, okay, that would be too far back. It's definitely interested in coming down. Yeah, because this isn't doing much. This is coming down. This. -1. No, that's regular 1. Okay. So 786 got you here. And then it came back up. So the question is, are we already in the downtrend? What happened the last time we came to 786? Have we... So boom. 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 Where are you going down? What the... Oh boy. What's happening? Oh boy. Well, so much for going down. Oh boy. Okay. Well, there's that. What do you do with a 500-point gap? Must be strong, so we trade away from it for 100 plus points. Jeez and Pred. Okay. Well, Fib 3 is useless to me. You must... Well... Then you probably look for a reason to turn around now and come back down. Let's see. Okay, rejection. What does that say? I know it's putting an order block, but what is that's a 1 minute bullish. 1 minute and a 5 minute. Okay, very well. Rejection. Very strong area. Which means probably continue to the upside. Next candle should be green. Oh, it's red. Interesting. Next candle. Also red. Well, it's going to continue to go down, I suppose. Okay, there you go. And then reject. Up. And that means the next one should be green. There you go. Why did that happen? So inconsistent. Whatever. I want to see it touch here. Maybe even, honestly, I want to see it touch here. I want to see it come here. I want to take a short off of this area, 415. Injection. Up. Up. Okay. Okay, we have a nice little breakaway gap there, which is now inverted. Oh, not yet. Okay. Okay, this would be a decent trade. Here, maybe. 362. No, I don't like it. It's not higher. It's just not. No. Maybe if you got in from here, consequent encroachment. I don't know. I don't like it. I mean, it should work, but it's just not a good entry. It goes, and it's supposed to, but yeah, too much could go wrong along the way. Yeah, see, like that. That would be a good entry. But I'm not doing it. See, because you might even have to come back. Exactly, that would have stopped me out. Plus, you might be waiting for a macro. Don't like this at all. You got yourself a bearish order block now, which makes it even more complicated. It's getting weaker, but still. Now's your macro time coming up. Okay. And now you could probably take this, honestly, down to here. I won't, but you could. Oh. You probably still can. No, maybe not. Maybe. Okay. Alright, so actually it's honoring the Sydney first presented. Okay. Interesting. Interesting. Okay. Yeah, you might come down to here and then take that up to there. I'm surprised it's taking so long though. But I guess you are in between a bunch of PD arrays. A higher time frame at least. There we go. Okay. And then come back down. Rejection of the consequent encroachment. Not what you want to see. Kind of time wasty. You know it's going to come back down here. Equal highs. So it's going to come back down. I mean, not because of the equal highs, but oh, because it's waiting for a Tokyo Open. No, this is yeah, it's waiting for Tokyo Open to do that. There we go. There we go. There. Okay. 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 Macro Open. There we go. What? Why? And then rejection. Oh, okay. Interesting. Okay. Okay. That's not what I want to see. Why is this happening? Why? I mean, okay, fine. But just fine. I mean, I know where it's heading. It's heading right here. Literally, this line, this area right here is where you're going. So maybe you could have gotten in here, I guess. But I was still looking for it to come back down here. So I would have missed out on that. There you go. There you go. Boom. So you could have gotten in off your rejection from here during the macro, 380. And then see where that goes. Could continue. May retrace a little bit, but it could continue. Yes. Continue. Alright, I didn't take a trade because that's... and honestly, if you took it off of this rejection, you're up almost 70 points. Maybe even take it up to here. I don't know. Oh, maybe start to reject. I don't know. Oh, that's still going up. Oh, surprise. Okay. Interesting. Interesting. Okay. Alright. I'm tired. I think I didn't take another trade. I'm gonna resume either later or tomorrow. But one day up $90, one day up 1,000. So 1,025. And then I don't think I trade the next one, so I'll make this a spreadsheet next time. And this could have been managed better, obviously.